Hi, this is Daniel with Unrivaled Investing. Today we're going to talk about a company that is disrupting the residential real estate market in the United States and Canada. The question is, how are they doing it? Is it sustainable? And from an investment perspective, does it have legs? Can shareholders ride this continued growth in the years ahead? The company is called Redfin. The ticker is RDFN, and we're going to get into it on this video. So why did Redfin get my initial interest? First of all, they seem to have a unique value proposition. Whenever you see a company that's doing something different than everyone else, it should get your interest. Sometimes it's the odd ones out that really disrupt a whole sector. And while they may start off small, before you know it, they're a huge company. They're also been fast growing for the last few years. So whenever I see fast growing revenue, I'm like, maybe there's something special going on. I want to dig in. And it's also a relatively new company. It's been around for just a couple of years in the public domain. So what are we going to discuss in this video? What is Redfin? Once again, ticker RDFN. What's their value proposition? Is it unrivaled? And then a free investment calculator that you can also click on in the description below this video, so that way you can play around with the assumptions yourself. We're sort of saying, like, what's being baked into the current price and where could the company go from here? I like to look at all companies through the lens of, can you make 10x over time on this? And if so, how would you do it? You always need to think about the components that drive your return. Is it valuation? Is it earnings? Is it revenue? Is it dividends? You have to think about these different components, and that's the point of this calculator of sort of penciling it out. But before digging into the details on Redfin, if you like talking about potential multi-baggers, companies that could potentially go up hundreds or even thousands of percent over time, hit that subscribe button. If you're already a subscriber, hit that like button. And if you want to know what I'm personally doing each month, what I'm buying and selling, what are the potential multi-baggers that I'm trying to find and trying to buy, go to unrivaledinvesting.com, click on Journey. And also, for those that click on Journey, I am creating some exclusive content that is slowly rolling out for the folks that click on that Journey button. So if you like that video, you should like some of the stuff that I'm going to be putting there in the near future. Also, if you've subscribed to this channel and you have a question or there's a stock that you'd like me to look at, drop a note and oftentimes I'll respond to you. Thanks. So what is Redfin? Redfin is disrupting the residential real estate industry in the United States and Canada. And honestly, it starts with the app. You can see a picture from the App Store where you can upload your home. The brokers can upload pictures of your home. They make it look real nice. Potential buyers can quickly see where on the map it is. They can tour the home virtually. They can see the layout of the home. And you can also easily, get in contact with a Redfin agent. We'll get more into that in just a second. And you can see the new listings every 5 minutes. So this is pretty much being updated in real time. And you can see what pretty much everyone else can see. You're effectively you're getting the power. It's no longer just this one-page sheet of paper that you can see at an old Coldwell banker's office. It's like, oh, new listings. Here's an app where you can see whichever geography you want, depending if Redfin's in that market, what's currently available, what recently sold. If you check out a house, are the schools good? You can see what the school ranks is. Is it easily walkable? So there's a lot of functionality that these apps are putting in your fingertips. And I say these apps for a reason, because anyone can list properties on a website or an app and show houses. They can coordinate. It's fairly easy to create a calendar app where it's like, hey, would you like to schedule a time to show, to go visit a house or coordinate, to meet up with an agent. But what sets Redfin apart? And that's the question that should be playing in your head as we look at this, because you can see, if you do a Google for like best real estate apps, you're going to see that there's actually a bunch of them. Redfin's listed number 2. And when you see like number 2, from an investment perspective, like a little red light should be going off, like, is this actually an unrivaled value proposition? For regular viewers know that I view every investment through the lens of unrivaled. If a company is unrivaled, it gives them the right to win. And if you have the right to win and you're tackling a big or growing market, that means you're going to continue growing in the years ahead. But if you're rivaled, it is trench warfare. Every day you're struggling to earn your bread, and there's no guarantee your company's going to succeed. And if there's no, if the odds are lower that the company will succeed, then from a shareholder perspective, it's certainly, your fate is tied to the company. So I would rather try to juice my odds, make sure it's favorable, and find those unrivaled companies or companies that strike me as unrivaled. So you can see here, like, it is a bit of a red flag when I see, oh man, there's eight of the best real estate apps. Like, ugh, like this clearly isn't a differentiator. And you can see Trulia is one, and they, same thing, real-time alerts, know before you buy, save your favorites, neighborhood map overlays so you can see what the map looks like. The app space seems like it's commoditized, in terms of looking at different properties. And here's Zillow, which is the #1 player. You can see that I say #1 player from an app store perspective, and you can see they have like nearly 5 million ratings in the Apple App Store versus like a couple 100,000 for Zillow. So there is a big difference. But the Zillow also has a very different business model. We can get into that in another video. So there are plenty of real estate apps, and once again, it's the same thing, like where to find homes, virtually tour in person, or schedule a tour, sell or price your home. And in this case, they have an option to rent. So having an app to tap into this ecosystem is, clearly an important gateway. It's not, though, the end-all be-all. So one should view the app as like, oh, okay, you're an app, that's table stakes. Like if you want to play the game, everybody's doing that. This is the buy-in. This is the buy-in for the game. But if you're going to beat the game or you're going to win at this game, and we're talking about the residential real estate market, what are you going to do that sets you apart? And that's sort of the question that keeps coming back here. What is there a bigger game that we're considering here? And how can Redfin potentially disrupt the industry? And the answer is they start with lower brokerage fees for residential transactions. So you can see the traditional brokerage fee in the US, and it's actually not this way in other countries. Like there are publicly traded real estate brokers like in the UK, and the fee structure is actually much lower. In the US, we have a very inflated cost structure, and that's just, I guess, just Americans accept it. That's the way it is. Status quo, go with the norm. Where it's 6%, in other countries it's like 4 or 5, could be lower. And so the traditional brokerage model, where you see 3% is the listing agent and 3% is the buyer's agent. Also, sort of non sequitur, that just drives me nuts. In the investment field, like if you're going to buy or sell a stock, you put a bid in, and the price that you're hoping to get, like bid is what you're willing to pay for, and offer is the seller's price. Why does the residential real estate industry use the term offer when you're trying to make a bid? Non sequitur just drives me kooky dukes. Like that doesn't make any sense. There should be bid, and the homeowner is offering. It's the seller. It's the bid and ask. Keep it simple. Versus the buyer is having an offer. Oh, gosh, ripping my hair out over here trying to understand some of this stuff. So what's Redfin doing that's different? You can see that from the seller side is that the buyer's agent, that's still going to be 3%. But if you're going to list a property on Redfin, keep in mind there are going to be any property that's generally publicly available. You're going to see it on Redfin anyways, along with the rest of these apps. But if you want to use Redfin as your seller agent, they're only going to charge you 1.5%. That is a game changer relative to 3%. That's a 50% cost reduction. How is it possible to have a business model that's based on 50% lower fees? Explain that to me. How can they afford to do this? And part of the answer is that they're using employees and not agents. Another part I'm not going to dig into in this video is that they are a tech company. So they don't need to have all these offices, and all this overhead. That this is a tech first company. But let's dig into this employee versus agents, aspect of the industry that I find to be super interesting. So these agents are paid salaries. This is not a commission driven industry. Typically, I was looking at Glassdoor like job postings for some of the largest real estate broker agent job postings. And it's really fascinating because like they all have the common like, hey, this is a commissions only job, and you have to be a self-starter. You have to be highly motivated. They use all these like cutesy terms to be like, hey, it's eat what you kill, and if you have a bunch of bad luck, you make nothing. And by the way, to because of this awesome self-starterness that you have, you're also going to pay us a cut as part of a franchise fee to whatever sort of bigger franchise we're part of, whether or not it's a Coldwell Banker or something like that. Great deal. You upside goes to them because, you know, if you're killing it, they get a cut, they get a piece of the pie. Or and the downside is like, hey, you don't make any money. Versus an employee model where you're paid a fixed salary and it's not tied to, hey, you gotta kill it, you gotta go hunt, you gotta go find all these, you know, posts and find these people and make sure you get the sales or get these properties on the market. That's not on you. So here's the data that I find to be incredibly interesting. Employee-led agents, this is from Redfin, who in 2019 were on average 3 times more productive and earn a median income that was twice as much as agents at competing brokerages. This is, first of all, this is an incredibly important data point because this starts suggesting this win-win virtuous cycle. And any business that I want to be in, I want it to be win-win because win-win is inherently sustainable. Any win-lose setup, that's not sustainable. And that's the reason why the brokerage industry has literally hundreds, thousands of competing small brokerage offices. Is it possible that you get one company that disrupts the sector and slowly takes market share and becomes 5%, 10% because they have a better mousetrap? That's the question for you to be thinking about as you're watching and as you're reading and listening about watching this video. So here it is. They're saying their people are more productive, 3 times more productive, and make twice as much as these self-starters. Let's visualize this difference. And you can see, you know, these agents earn more being with Redfin. So they're agents, but they're getting a salary. They close more deals, and they're more likely to stay. Like, this is critical to think about when you think retention and churn with employees. That's a real pain in the butt. That's a real cost for companies. Like, oh man, this guy just left because he wanted to start his own thing, or this person's, you know, like, think about the training costs that go with it. So when you're talking about a big difference, you know, like nearly a 20% difference in retention, that's much lower cost that you have to deal with making sure you keep your talent in-house. So why you're probably looking at this picture, you know, as I'm talking, you're like, why is he showing me a picture of a puppy? And that goes to this next point. You know, like when I think of a puppy, I think it's cute. You know, the dog becomes loyal over time. That dog will, you know, this dog, it's not blood, it's not related to you, but this puppy will die for you at some point in the future. It will become that loyal. And the question is why? But that's sort of a non sequitur. But that fits with this. So maybe an analogy, not non sequitur. So it's these agents with better service, more productivity, they also have different job specs. So if, once again, going to Glassdoor, you meet all your clients through Redfin or by referral, no prospecting required. Think about it. If you're used to a smile and dial, driving around to prospect, think about the wear and tear on the person that has to do this. Here, Redfin agents like, oh yeah, the business is just coming in. It's these sellers that are like motivated to be like, yeah, I want to save 1.5%. That sounds great. On a couple $100,000, that's real money. Multiplied by, you know, thousands of homes, boom. So all of a sudden the job's different. This is not a traditional real estate agent job. Build relationships with buyers while sharing your expertise to help them navigate their home purchase. Receive hand-on training. So if you're treated like an employee, you're more likely to get the training you need because you're going to stick around. It's not like, oh, this guy hasn't proven himself yet. It's like, oh yeah, we're making the investment in this person. He's part of the company. That's part of what I'm getting at. That's the reason why I'm showing that picture of the puppy, is that when you have consistent buy-in, you're going to see better metrics like productivity, like compensation. That's a win-win. And that's why you see this happy puppy down here. is like this consistent display of like, yeah, we are going to train you. We're going to pay you a salary. You're going to have an income regardless. And we're going to make it easier for you. We're going to put the business on, we're going to put the food on your plate. You don't have to go hunting for it. Think about it's completely different species. It's a completely different job. So of course you're going to have a different outcome. Of course you're going to have a better workforce, in my opinion. Like, who would want to stay at a job where you're like, oh yeah, I don't know, like, I don't know how things are going to work out. I have to eat what I kill. Like that, sure, I understand that is definitely for some people. But in this environment, like, how many loyal puppies are you going to create? How many loyal dogs are you going to create? You know, how loyal will your sales force be? How loyal will your force be? Your employee force be? Unless you get everyone aligned, where it's like, oh yeah, we all need to be, getting these benefits together. Like, for example, they talk about how they offer, paid vacation, paid maternity leave, sick leave. These are important things. They also, so it starts off with base salary, but yes, there's a way to align it with based on activity. And so this becomes the win-win, which is you're 3x more productive than those competing agents, and we're going to pay you for it. You're going to get the transaction bonuses. So that's why your all-in pay is going to be more. So this is creating this beautiful, virtuous win-win relationship. 401ks, covering your fees as a real estate agent. So does this model actually translate into a strong value proposition? And where I always check to see if a company is winning from the value proposition perspective is, one is their revenue growing? How is it growing relative to competitors? That's sort of a question to thinking about. But in this case, revenue is actually a little deceptive. We'll get into that in a second. So then maybe let's move on to what's their market share and how's their market share trended over time. Is it favorable? Is it stagnant? Are they taking share from the market? And here's what's amazing. You can see the US market share by value of the homes, and it's gone from 2015 from 0.4 to 0.93. So it's doubled, more than doubled from 2015 to 2019. Now there's also a critical point here. So not only have they doubled in terms of representing the number of homes on the market, which reflects, hey, we're starting to get some traction here. What's interesting is how small that is. 0.9%, not even 1%. That means they're tapping into a huge market, literally billions and billions of dollars, tens of billions of dollars that they're just tapping into. And this is just their brokerage segment. We'll get into maybe some other ways they can be tapping into the business. But seeing this market share growth, where they're incrementally each year taking more of the pie, even if it's a little, this gives me confidence that they might have an unrivaled value proposition. Despite the concerns that we initially saw, seeing that there are multiple apps and that it's sort of table stakes to have an app in the App Store that shows real estate listings, the fact that they're slowly taking market share suggests they're disrupting and that their lower brokerage costs are truly a disruptive force. So what does their revenue actually look like if I'm saying it's sort of deceptive? So you can see this pie chart, about 60% is their brokerage revenue. So that's purely those fees that they're charging for either buying or selling a house, where they get, 1.5% for either buying or selling a house. They also have 3%. This is interesting, for partners revenue. They call this out as effectively, our agents are so busy with the business that's coming across our desk, we can't handle it all. So we every year send some business out to other outside agents where we get a cut of the deal if it closes. That's, in my mind, that's very good, because that gives you flexibility. If, let's say, there's a downturn, you're like, no more business heading to you. But in an upturn, like, hey, things are going well, we can always lean on the existing supply to make sure the existing supply of other agents to make sure a deal goes through. And those other agents, keep in mind, they're happy because they didn't get that deal. This went through them because of Redfin, because there was someone looking at the house and said, oh yeah, I'm potentially interested in buying this. Help me find an agent. So this is interesting. Like, but this is less than 70% of their revenue. Like, where's the rest of their revenue from? Because going back, like you're seeing this incredible growth, like 60% growth, like whew, what's driving that? And it's great to see like 49, 43, 38, 32. Those are great numbers. The real estate industry is not growing that fast. Once again, fits with the idea unrivaled value proposition. Okay, so I'm warming up to that idea. But why is less than 70% of their revenue brokerage revenue? What's this other? Properties is 34 and others 3%. Also, don't be deceived by this chart, because whenever you look at revenue and the revenue breakouts, you always, as an investigator learning about a company, you need to think about what is the actual profit margin profile of each of these revenue sources. And the reality is, at this point, this is around the second quarter of 2020, nearly 100% of their gross profit. So profitable business. I'm not even talking about like after, all sorts of other expenses. I'm talking about relatively high up. Their gross profit. This is before sales and marketing, before tech expense, before G&A, before depreciation and amortization for the most part. Their gross profit is 100% coming from these two, brokerage and partner revenue, which is effectively the cut they're getting on the home sales. This other third of the pie, greater than a third of the pie with properties and other revenue, one needs to understand like this is generating close to zero of the gross profit. And so whatever revenue figure you're using to think about the valuation, you're going to need to break it out into these different components. So what's the properties and other revenue? So Redfin Properties, that's a relatively new development in the last year or so, where they've launched Redfin Now, where a customer requests an offer online. Bid versus an offer. Customer requests a bid online. Redfin Now assesses the home and makes an offer. That makes sense. Makes an ask, has an asking price. If the offer is accepted, Redfin Now arranges an inspection and the customer chooses closing date and receives the cash. This is pretty exceptional. So Redfin is effectively saying, we think we know the market so well that we're willing to buy up homes directly ourselves. Now, where it gets interesting is that the commission or the cut is 7% versus 6% for the traditional model. The reason why it's 7% is you're completely removing any sort of agents because the owner of the home's going directly to Redfin. But Redfin, it's also sort of like, are you really going to size up whether or not this home is a great investment? Like, does your assessment of all these properties give you that much of an edge? How much of a margin are you actually going to get from this? Effectively, like you're thinking, like, could I be you're not even, it's home flipping, but without updating it. It's sort of saying, I think the price here is going to be better than it's there. I don't get this segment. Like this business, I've read about it. I don't get it. I don't get the appeal at all. I originally wrote, this is dumb here, but I wrote, honestly, not sure about this instead. It's currently not profitable. The reason why I wrote this is dumb, and maybe that was too harsh, is because in investing, there's sexy and then there's hard. And sexy is asset light, growing real fast. Like their brokerage business, it's grown 20% a year. Most years, past years. Great, more than 20%. It's asset light. You got this great website, you got this great app, you got these people. Like people admittedly aren't asset light, but it's a cost. It's pretty much a variable cost because even though you're paying them salaries, you can scale them up based on how productive they are. It's a great business. You don't have to invest a ton of capital. You don't have to go, buy some properties. Here, like the margins, first of all, you're going to tie up this property. You're going to tie up all this capital to buy these properties. You're going to have to take on debt. Like for what sort of margins? Like you're not going to be talking about like huge margins. You're talking about 7% margin. It's capped at that because that's the take rate. So the question is like, is this 7% margin? Like, can you actually get something on that 7%? I don't get it. Like it seems super tough to go through this process of like buying and selling a bunch of houses to make a spread. What other initiatives is Redfin doing? Because like you got to give them credit. Like this does reflect that they want to own the real estate market, that they're going to do whatever it takes. I don't know how sustainable this part of the business is, and this is 30% plus of their revenue. Yeah, I'm not sure how sustainable it is if you're in an environment with much higher interest rates. Right now, we're near record low interest rates. It's a question. So what other initiatives is Redfin doing? Because they clearly are trying to disrupt the whole space. And so you can see, here's their vision on selling a house. There's like all sorts of really clever ways that they're doing it. They have like Redfin Concierge, where we fix up the home for a 2.5% listing fee and 2% if we buy and sell it. And then they have Redfin direct offers, where they allow the buyers to make offers, to make a bid online for Redfin listings without an agent. So you can like reach out directly to an agent and be like, boop, this is the amount I'm willing to offer. And then there's Redfin Direct Access, where they're now allowing buyers to go directly to the homes. Now, I don't know how successful some of these initiatives will be. Maybe they'll be very profitable and successful. Any investment, I always have sort of the skepticism hat on. So like Redfin Direct Access, I'm like, oh man, this is going to cause lots of trouble. Imagine all these people like checking out homes without an agent. Like part of the reason why you have an agent go check out homes, make sure like no trouble is caused. So like, are you going to get into some problems with people checking out homes and causing trouble? Less likely in the COVID era, but I don't know. But so that you can see they are trying to tackle this industry through so many different elements. You got to give management credit for this. Like this is very thoughtful. And if one of them hits beyond the traditional Redfin brokerage, that could be a further game changer for the industry. But this actually fits into an even bigger vision that management has, where you can see here's their strategy, and it's vertical integration, where it's, hey, we have low marketing costs to get all these viewers to look at these properties. And if we're representing the sellers, like this is great. Like we are getting these buyers to look at us for free. We don't have to pay for this. This is what makes the employee model work. And they have the #1 most visited brokerage site because their app is different than traditional, than other apps like Zillow. So that you get a consistent customer experience, customers save money, margins improve. So they're walking through their strategy. But then their last component, long-term complete solution. They want to own everything from soup to nuts about buying a home. And this is really interesting. So like there's so many people that get involved when you're buying a house. You've got to get the mortgage, you got to get title insurance, you got to get appraisals. What if you had one player that helped oversee the whole thing, and not only helped oversee the whole thing, but figured out what are the juiciest parts of this that they can disrupt at low cost and get a cut from it? Then it starts getting interesting. So like I'm impressed with the grandiose vision that management has. And you know what? They might just execute on it. Like this is cool stuff that they're doing. And they are, like, admittedly, I don't like the properties thing. It doesn't really make sense from an economics perspective in my mind. But it's cool to see that they're like, oh yeah, we're gonna try to get mortgage origination, title service. They have walk score data services that they get revenue from, advertising. So I think, the data sort of suggests an unrivaled value proposition, considering that they've grown market share and they've grown very quickly. The data suggests that they're tapping into a huge market, less than 1% market share revenue, as a total of the pie. But what about the valuation? What should investors expect in the years ahead? And also, what happened recently? Looking at 2020 has been an interesting year. And what's going on in 2020 is it's crazy time. It's bananas. Redfin blew away our second quarter financial targets. Okay, within the span of a single quarter, year-over-year changes in demand. This is during the second quarter. Went from negative 41% to positive 40%. A level of volatility that I have never seen in nearly 30 years of business. So, I mean, I wish I could make that crazy guy, like that crazy guy face, just because, like, how many businesses go down -40 and face the prospect and then go rebound 40, this positive 40 in the same quarter? This is crazy. Um, then it goes on, where over the past 2 months, Redfin online visits and customer inquiries have been growing at a faster rate than at any point in the last 3 years. Okay, so with COVID and work from home critically, I think people are reassessing where they want to live and reassessing, will they ever have to go back to the office place? And if you don't have to go to the office place, then you're like, well, maybe it's time for me to move to that dream house that I always dreamed that's in the middle of nowhere. Or maybe it's a suburb of the middle of nowhere, or it's a suburb of the city. Um, and like that's what we're gonna do. But at first, it's like, oh my gosh, lockdown, like no tours. How contagious is this? People are going to die. I don't know what to do. So -40 to like, hell yeah, you only live once. Let's go get that house. Let's do it. Let's make it happen. And so they've gone from literally furloughing employees to a tornado of hiring in just a matter of a couple of weeks. It's crazy. I personally hate to be having to like run and find it. Like if you're in charge of like the financial planning at this company, like you've probably had a heart attack. Like there's no freaking way you can accurately plan something like this. Like yeah, and to be judged on the accuracy of it, it's gonna be completely out. -40, +40 in one quarter. It's ridiculous. So how do you think about valuation when looking at Redfin? I've talked about the different elements. Let's dig in on the valuation. And so you can see, first of all, my value proposition to you, and I'm trying to have an unrivaled value proposition to you, my loyal YouTube subscribers, is that, and you are subscribing, right? Is that in the bottom of this video, I'm going to have a link so you can just click on it and you can play around with your own assumptions of what you think Redfin is worth. What do you think it can do based on these different components? That's up to you. So that's my value proposition to you. I'm trying to stand out from everyone else by bringing these types of tools for you. So you can see what I'm penciling out here. I'm focusing primarily on their real estate services segment, their brokerage and partner revenue. Even though that's less than 70% of their revenue, it's pretty much 100% of their gross profits. So predominant current economic value comes from those segments. So I want to dig into like, hey, what can we pencil out for them in the future? You can see 2019 sales of 524 million. Given that 2020 is a freaking weird year, and I have no idea how it's going to pencil out. Like they were penciling out -40 at one point. Now it's record interest and demand. I'm putting a range of -9 to positive, effectively -9 to +10. You can play around with these figures yourself. Maybe I'm way off for 2020. Like maybe it's +20 for the amount of business they do. Maybe that's the high side. I mean, it truly is. This is a really tough one to sort of pencil out. But what's the long-term margin? And this is also worth digging into, which is that when you're looking at this business, the reality is the real estate services segment is less than 30% gross margins. So if you're less than 30% gross margins, what's sort of the optimized margins? You got all the expenses of running the app, the people, the employees. Like what? This is tough. Like it's in my mind, it's sort of tough to pencil out. Like this is going to be, if you're 30% gross margin, like I'm penciling out 5 to 10% operating margin. It would be tough for me to be like, oh yeah, 20%. Like that just seems really high relative to a 30. Like that means all your expenses would be going, everything tied to, G&A and sales and marketing. That would only be 10% of your business. That's a tough one, especially when they're considering all these other initiatives. So that's why I'm penciling out like 5 to 10. You, once again, this sheet, the power is in your fingers. You can do it yourself. If you want to say 15% on the high side, like maybe. And keep in mind, this is hypothetical. Could, the share price alone, has gone bananas this year, like really high and really low. So, keep in mind, this is a hypothetical exercise. Could it go way lower than the high and, way higher than can it go way lower than the low and way higher than the high? Yeah. But this is sort of just penciling out what's being baked into the current valuation. That's actually the main way I lay this out. It's like what's being baked into it versus what's the upside. And so if you assume 5 years of somewhere between 15 and 20% growth for the real estate services business, and that strikes me as reasonable. Like, they've historically grown 20% plus. As they get bigger, it gets harder. Does seem like they have an unrivaled value proposition with their cost structure, with some of the creative initiatives that they're doing. Could this continue to grow 15, 20% a year? Yeah, I think so. So put that there. And, you can see, slap on a multiple of 20 to 30 times 5 years from now, and you can see it's ranging somewhere from under $1 billion to over $3 billion in valuation. And that's when you're going to be like, Daniel, but the current valuations are, well, just under $5 billion. So what's going on? Are you saying there's just a lot of downside? Not necessarily. Potentially, but not necessarily. You also have to figure this component, which is the implied value of properties and other. And that's the properties revenue that we were talking about, where they get a 7% from the properties they buy. And then they're going to try to get another cut, when they're selling it. And then the other is the other component that they're just growing out. And you can see, I put the annualized run rate based on their second quarter results for each of these. Their other being like title insurance, mortgage origination fees. So all in, like around 300 million in other revenue right now. And it's sort of a question is what's the economics of those two segments right now. If you look at the market valuation of around 4.8 billion using a $48 stock price, that implies somewhere between 1.5 billion to 4 billion for these segments. And that's just sort of tough for me to underwrite, because you're saying 85% of the value in the low side comes from these two segments that are currently not really profitable. Their other revenue it depends on the quarter, but their properties isn't. Same with the high here. 30% of the valuation is based on some sort of implied value of properties and other. So owners of Redfin shares, you really need to have strong conviction. You need strong conviction on what the value of these other segments are, these properties and other revenue. You need to be, if you're saying, if you agree with my real estate assumptions that I have here, and you say, yeah, this makes sense, like the valuation range, let's say, is $1 billion to $3 billion, but the current stock price is around $5 billion, then you need to say, and keep in mind, these are rough figures. I'm not counting some of the cash, but these are ballpark figures, back of the envelope sort of calculations. You really, if you own Redfin and you're like, yes, great deal at $48 a share, I recommend everybody owns it. Like if that's what your attitude is, and keep in mind, I don't have any skin in the game with Redfin. You need to have really strong conviction that their property segment will, at a 7% take, at a 7% cut, could generate, real margins over time. And I'm just not sure, what that looks like. Let's say a 300 million run rate now, maybe they can grow it to 500 million, relatively quickly. 500 million, you're talking about operating margins. It just doesn't strike me as going to be super profitable. It's tough. So but if you own the stock, you need to have an opinion. I don't own the stock, but if you own it, you need to have you need to have an opinion to justify the share price. But if you want to know what I'm buying and selling and hold each month, go to unrivaledinvesting.com, click on that journey button. I'm also slowly but surely generating exclusive content for subscribers only. Some of it will be videos about individual companies. Some of it will be about my own personal take, that's sort of a casual conversation about what's going on in the market, what do I see that's sort of interesting, and maybe reacting to current events. So that's unrivaledinvesting.com. The The truth is, I'm trying to bring a lot of value to you, not only in these videos, but if you go to check out my personal financial journey. And I hope you enjoyed this video. If so, hit that subscribe button. If you're already a subscriber, hit that like button. Thank you so much for watching.